Good morning everyone and welcome to the Money Control live stream. You're watching markets with Santo and CJ. Well, it's been a mayhem in the forex markets today, this morning. If you look at the yuan, you look at the yen, you look at the euro and you look at the rupee, all these markets are in chaos because of the demand that we are seeing for US dollar at this point of time. And I mean, the dollar's ascent, Santo, could totally, probably shake the equilibrium, the policy equilibrium of the RBI going ahead. Sinking rupee itself is a problem because, at this point of time, import is very strong. If you look at the non-oil import itself, that is growing in the range of about 40 to 45% at this point of time because of strong domestic growth. And that creates problems because if you have a weaker rupee, that means your import bill is inflated and that adds to the inflation pressure that you see at home. Now the worry is that we have already opened at a at a record low of about 81.55 on the rupee, which means that 82 is not too far. But traders are now worried that probably if this ascent of the dollar continues towards what makes some think that the US dollar index could go as high as the 119 level, then the rupee could sink to as low as 84, Santo.
Well, yes, CJ, also typically when the rupee depreciates, you have some benefit through export earnings, but this is a point at which you're seeing a slowdown in global trade as well, and India's exporters too are facing pressure in some form or the other. That apart, the RBI has spent close to $94 billion over the last 1 year in trying to
percentage of our
GDP.
GDP.
In trying to defend the currency, and in August itself it has spent close to about $15 billion. So things not looking very pretty at this point in time. It is a tough fight for RBI, and remember the RBI will have to intervene selectively. It has to. There's also the question of RBI's credibility at stake. It can't intervene and then being shown as being unable to defend the
you
rupee.
don't want to be tagged as a currency manipulator by the US Treasury Department. So that is one risk that RBI also faces at this point of time. But then, which government is not intervening in their currency market? You talk about the Chinese government. You talk about the Bank of Japan. After the first time since 1998, they intervened in the yen market. And what happened? The yen rallied a little bit, but at this point of time, it's gone back to the level that it was before the intervention. So clearly, at this point of time, policymakers are clueless at this point of time how to react to what is happening in the currency market. But what is really driving this? So there are two factors behind it. A, of course, there is strong demand for dollar. Now, why is there a strong demand for dollar? Because there is a divergence in the way a lot of central banks are moving out of the the post-pandemic policy environment. When the pandemic happened, every central bank out there cut policy rates as much as they wanted to help their economy. But when they are getting out of the pandemic, every central bank is getting out at a different rate and a different pace. I mean, if you look at it, out of the three biggest central banks, only the US Fed so far has done any sort of meaningful rate hikes. The Bank of Bank of Japan has not even thought about rate hikes at this point of time. And if you look at the European Central Bank, it only last week started its first set of, or last month started its first set of rate hikes. So clearly there is a lot of divergence, and on top of that, now there is concerns about recession in the Western world. We already know the chaos that has been caused by the energy crisis and the Russia-Ukraine war in the European economy, and US economy itself. There are also concerns that next year is when the economy will tip into recession. So in such a risk-averse environment, you will see people flocking towards the US dollar, which is the safest asset at this point of time. Well, but don't tell that to equity bulls in India, because for us, clearly, all of those things don't matter. But the fun fact here is, Santo, if you look at the UK's pound, on Friday, it tumbled to the lowest levels since 1985. I mean, those are levels when Thatcher was the PM, not, Truss. And that happened after a sort of new mini budget that the finance minister in the UK had announced. And the fun fact is that sterling's fall on Friday was greater than the fall that it had seen when George Soros broke the Bank of England back in 1992. So that goes to show the magnitude of the moves that are happening in the forex market at this point of time.
Well, and back home, parallels are being drawn with the 2013 crisis in the rupee. But at that point in time, it was still easy to reverse course, at least what happened at that point in time. But there was this infamous taper tantrum when the Fed said it would start rolling back its stimulus, and when it said that okay, now it would do it in a gradual manner, things came back to normal pretty well. But this time the situation is quite different. There are far too many moving parts, and that is what makes
Yeah, I mean, Santo, the biggest canary in the coal mine is basically inflation. Last time around, Fed could move gradually because inflation was not as high as 8%, right? They had that bandwidth to go slower. But this time around, Fed, as we all know now, has lagged behind, and therefore it has to go as fast as possible in unwinding its balance sheet and also raising rates. So any sort of help from the US or Uncle Sam is unlikely to come on these shores this time around. Well, that's it. Let's quickly look at the trade setup for today, and clearly it is going to be a very negative day. We are staring at almost a 1% cut on the Nifty 50. Wall Street also sank more than 2% for all the major benchmark indices there, largely on the back of rate hike fears as well as growth fears that we have been talking about. And if you look at the Asian markets, there also we have had a very weak start, except for the Chinese tech stocks in Hong Kong, which have rallied 3%. The Hang Seng Tech Index is up 3% on a day like today, and those are because of certain rumors that have been floating around in the global markets over the weekend. Santo?
Well, expect more FI outflows, CJ, given that the rupee is under pressure. Typically, even though FIs do factor in for some kind of rupee depreciation, this clearly will affect inflows, at least in the short term. And you can see some kind of a pullback rally because the market has now fallen quite sharply on Thursday, Friday. Most likely it will fall sharply today as well, at least in the early part of the day.
Yeah.
Expect some kind of a pullback, but this one will be difficult to sustain. Well, that said, let's quickly move on to the stocks on our watch list this morning, starting with Dr Lal Path Labs and Metropolis lows over the last couple of months. Partly it has also to do with its decent first quarter earnings. So this is a case probably where I think market is saying this is the bottom for now. Now let's wait for competition to actually step in and see what kind of impact is there on the earnings. So at this point, probably going short on these stocks doesn't make much of a sense, CJ.
Well, Santo, it could also be a bull trap, sometimes, or a bear trap as one may call it. Because if you look at the industry at this point in time, clearly this is an industry which is in the midst of a battle for market share, with new members and the incumbent tugging it out there with a lot of money. It's not that the incumbents also don't have a lot of money, because let's not forget that these incumbents were very good cash generating machines. So they themselves have a lot of money in their pocket to continue to take that hit on their margins. And clearly, even if revenues continue to grow from here, the major issue that investors have, that the margins of these companies, or profitability, a lot of these companies will settle down at a very lower level than what we are used to in the past. And Santo, if you look at it, going ahead in the September quarter, when these companies come out with their earnings, I think it will be very interesting to see whether the revenues have recovered to the normalized level without the help of COVID. Because remember, during COVID times, these companies saw extraordinary growth in revenues because of lab testing and whatnot, and then that revenue also fell off a cliff once the subsequent waves subsided. Now we have to see whether they can go back to the pre-pandemic level without the aid of any sort of tailwind coming from COVID. Apart from that, if you look at on the technical factor side also, Santo, both Metropolis as well as Dr Lal Path Labs at this point of time inhibiting or exhibiting extreme weakness on the many of the momentum indicators, and therefore I'm not so confident that any sort of price move at this point of time is sustainable, because you will have a lot of players out there who would want to sell on rise at this point of time and utilize this rally to sell as much as they can and cut their losses.
Well, my limited point here is that probably a lot of selling which had to happen has already happened.
Possibly.
And now onwards, you're seeing these companies also aggressively expand their own branch network, which over time should definitely help boost their earnings.
Yeah, in the long run, of course, there are no doubts, but I think we will have to wait and watch on that one. Well, the next stock today on my radar is the new baby in town, that is Harsha Engineering, that the stock is going to list on the board. So it is expected to have a very strong listing. People are expecting as much as 50% upside even in a weak market like today. So very interesting to see how that one turns out. I'll get to the fundamental side of Harsha Engineering, but before that, let's quickly take a check at the market. And clearly, it's been a 1% cut on the Nifty as well as on the Sensex, with the Sensex down nearly 600 points.
Mid-caps also under pressure, down close to about 1%, the Nifty mid-cap 100. And you're seeing the advances to declines clearly being in favor of the bears at this point in time. 500 stocks up, 1500 stocks down. Nifty Bank down a little over 1%. This is one sector which has seen huge selling in the last
And that is, I think, down to FIS, Santo. Nifty Bank. If you look at Nifty Bank at this point of time, a lot of selling is largely not because of fundamentals, but because FIIs are usually the majority owners in a lot of these banks, and therefore this sector is bound to take a lot of this beating. But if you look at the India VIX, that has clearly moved up almost 9.5% this morning in trade. So clearly a lot of short positions being added, a lot of put options being bought as hedges at this point of time. And Santo, sectorally, clearly all the sectors in the red at this point of time. Well, coming back to Harsha Engineering, Santo, I think, when the stock was going into IPO, or the company was going into IPO, there was a decent amount of buzz among the analyst community because they were quite optimistic about the company, in the sense that because it has a very dominant position as far as the precision component and bearing cage market comes, it enjoys a decent market share, also has a high barrier of entry, which means that no competitor can just easily come in and take away the strong margins that the company is enjoying. And therefore, analysts believe that even if the company has a very strong listing today at 10 o'clock, those listing gains will not be temporary. You could see the stock doing quite well going ahead, and the demand is likely to remain quite strong.
Well, at least the grey market clearly indicates that the stock is in for a strong debut, no doubt about that. Valuations at this point, I would say that they are fairly reasonable, but there's one quibble I always have about IPO companies. Just the 2 years before they hit the IPO, you'll suddenly see a huge jump in top line, bottom line, everything. So just in the case of Harsha Engineers too, the top line has jumped by 50% over the last 1 year. That's quite, while it was pretty flat in FY 20 and 21, last year suddenly it has shot up by 50%. And also if you look at the operating margins, though, have been slightly under pressure. So it's been a almost.
I think that is down to sort of the fact that raw material prices were also.
That is one point. Again, if you look at the net EPS also, it has almost trebled in the last 3 years. So typically these are. I am a little skeptical of this sudden improvement in financials, but that said, it's going to be technical factors in play over the next few days. As I said, at 30 times trailing earnings, maybe the stock is not so expensive, considering that it has managed to grow its top line 50%. But maybe there is some room for caution here. You need to see whether the company is able to sustain this over the next few quarters before jumping in.
I think, Santo, that has been the most impressive part, that the company has not priced the issue very aggressively. They have gone in the middle path of pricing it closer to its fair value, and therefore leaving something on the table for investors.
Well, it's a manufacturing company, so if you ask for 80 or 90 times, you're unlikely to get it. So there's also the market would have borne only that.
Crazier things have happened in this IPO market
definitely
in the past 2 years.
Fortis Healthcare, now the stock saw a huge sell-off last week. That was mainly again on technical factors more than anything else. The expectation were that finally the Supreme Court would give the go-ahead for Malaysia-based IHH, which is the majority shareholder at this point in time, to make an open offer, but that hasn't come through. That has again been stayed, and because of which you saw a sharp sell-off in the stock last week. But on the whole, the company's fundamentals have been clearly improving, and according to Jefferies, the legal overhang may not have much of an impact on the company's operating performance, and Jefferies has also said that the company's hospital business clearly has been on the mend for some time, and 31% of its operating beds are generating a margin of more than 25%.
Well, Santa, clearly fundamentals I don't think would be affected by something like an open offer at this point of time, but what will be affected is the sentiment towards the stock, because the stock had rallied quite sharply, Santo, in the expectation that an open offer will be coming, which has been pending for many years at this point of time. But now that it is not coming, at least in the foreseeable future, I think you could see a lot of unwinding of speculative bets or speculative long positions that had been taken on the stock on the counter for the past few weeks and months. And because of that unwinding, the stock could remain in pressure going ahead, in my point of view. Also, the one fundamental concern that could emerge is the impending decision of the CCI as far as the allegations with respect to market dominance is concerned by a lot of the hospitals in India. Money Control broke that story last week, and clearly there is a big risk because, Santo, according to the story, the punishment could be as high as 10% of your average revenues in the past 3 years, and that is a big sum if you look at some of the top lines of the hospital companies or hospital chain owners in India, including Fortis. So that will be my limited opposition to a stock like Fortis.
Well, CCI has been trying to get the cement companies to pay up for a long time. Nothing has happened. It keeps passing orders, but these do take a long time to play.
They do. It's a cumbersome process, but I think that is something that one risk that investors ought to watch out for. That said, the last stock on our list today is Hindalco from the metal space, and this stock has been under pressure recently, but I think the pressure is going to get even more a compound going ahead because one of the biggest customers of a subsidiary, Novelis, has actually come out and cut its guidance for volumes as far as beverage cans are concerned. BALL or Ball, which is one of the biggest beverage can makers in North America, has trimmed its 5-year outlook, volume growth outlook, last week after their earnings came out, and they have said that in the near term, the decline in volumes could be even sharper than what they have projected for the 5-year outlook. So clearly, things are not looking good as far as the beverage can market is concerned, given the fact that Novelis is a big player in that market because it's a big supplier of aluminium to beverage can makers all across the world, and especially so in North America. And Santo, Novelis was probably the only positive that Bulls had when it came to Hindalco, given the fact that in the domestic market, we were not seeing that uptick in demand. Prices had anyway been suffering. So for me, I think this is one stock that could remain under pressure going ahead.
Well, I would look at it another way, CJ. The stock fell sharply, then rebounded, but then had been range bound for quite some time. So maybe despite the upbeat guidance from Novelis, probably the market was expecting some kind of a bump in the road ahead, given how the global situation was playing out, and that's why you're not seeing the stock really climb above 400. So at this point in time, maybe to an extent, the market seems to have discounted the pressure on Novelis earnings to some extent. The guidance has been quite rosy. In fact, it has been better than expected. Now, unless
down on the
Novelis trims its own guidance, I think probably the stock should just about do okay.
I think, Santo, in hindsight, probably the rally that we have seen from towards the mid of June till Hindalco's earnings, Novelis' earnings came out in last quarter. I think that probably provided a good exit point for a lot of people to book profits on Hindalco, but clearly at this point of time, in my view, the stock will remain under pressure.
Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thanks for watching, and please do post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for S&P Financial News, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a good trading day.